Let's do it. Hello, everybody. Welcome to TraderMerlin Show. It is your Monday edition. Hello, Jerry, Big Eb, Ivsy, Tom, Alex. Good to have you with you. You're regular now, Alex. He fell into the trading hole that is the TraderMerlin Show. Thomasina, good to have you with us as well. Hope you guys had a good trading session out there, even though we started off on a really strong footing because, hey, we can all go get a vaccine that's going to give us all kinds of weird other side effects in a couple of years. At least we have the hope that we'll all get back to normal. Of course, the market sold off a little bit from there, but we shall see how the remainder of the week turns out. I'm talking very quickly, obviously, because this show is being brought to you by Dr. Pepper. Totally kidding. I don't drink. Not brought to you by anybody, but just me, myself, and I. But I want to get to my guest who has been waiting in the wings. He's shivering outside in the frozen tundra of the Northeast. We've got Mr. John Rowland joining us today. John, how you doing?
Very well, very well. I'm social distancing from everybody.
Yeah, right. He's going not quite Unabomber style over there. He's got the beanie on. He's hiding in the trees. I like it. I can't even hear the wind or birds. It's amazing. And the clouds are still as can be. It's awesome. There you go. How you been, my friend?
Good, very well. Thank you very much. How about you?
Great. You know, other than quarantine, life is good. I'm doing well.
It's amazing, isn't it? It's just so bizarre.
Absolutely. Today's show, you're going to go take a step back maybe from the minutia of trading specifics and go more into broader trade plan. I received a couple questions over the weekend, and I thought, you know what, let's dive into a real simple topic because I think it's often overlooked, and to me, probably one of the biggest pieces that helped me get over a lot of the challenges I was facing, which is trading plans. So, of course, as you guys saw, maybe the marketing materials, there's our trading plans. You're dodging bulls, you're dodging bears to hopefully get to X marks the spot. John, talk to me about the significance of trading plans from your perspective, because you've been doing this a long time, starting on the trading floors. How have they impacted you, and how would you craft yours?
Well, I really do believe that, without a plan, the old Ben Franklin expression, without a plan, you're planning for failure. And I certainly believe that. So, I mean, there's a lot of different components to a trading plan. For your viewers, I would say that, let's just talk about the big picture, not necessarily the strategies, but, having a purpose or an objective. A lot of times, when I was in the classroom, students would ask me like, oh, my purpose is to make money. Well, that's not a purpose, right? We need to have some kind of objective, like whatever, financial independence, or, I want that vacation home in the cabin in the woods, or even in something, non-material, like you want to be able to leave a legacy to your grandchildren or your children, or create, a soup kitchen or something.
Or even given, I know a lot of people that their trading plan is a percentage of their profits they give to their local church, and it's like whatever gives you that feeling of accomplishment, of helping out. I mean, I think that's great. And I like that you said that first and foremost, because I get it all the time when I taught the trade plan class at OTA was, I just want to make money. Well, that's not really an objective, right? So my initial trading plan, I steered away from the making money aspect, and it was, I want to go on a 2-week trip to someplace I've never been to every year. That was just one staple of my trading plan. It's like, okay, obviously I need to have trading profits or income to achieve that goal, but that was something that, I love doing. I love traveling, and I put that right in my trading plan.
Yeah, for sure. I mean, even like, I always talk about, making that connection between an objective and some goals, right? We want to kind of create, retrain our brains that trading is something that's enjoyable, or gives us that warm and fuzzy feeling, right? And so, money can kind of do that, but really these other things, non-material, for instance, they mean more to us, and we're going to make that connection and retrain our brain. What I always used to tell students was, like Pavlov's dog, I want you to start salivating when the opening bell rings. Not because you're going to make money, but it's going to get you closer to one of these objectives or one of these goals that you want.
What's yours? What's your objective? I know you've probably got a few that you want to share. Come on.
Well, unfortunately, I don't have a retirement plan. I just have an expiration plan.
But I think, over the years I've known you, one of the things I know you love to do is love to go skiing. You're always going different places. You're an outdoorsy guy, and I'm sure that part of your trade plan is focused on that.
Yeah, it is definitely. It's all about travel and traveling to different places. I always try to pick out one different mountain somewhere in the North America to go, or eventually I want to do some skiing in Europe. Unfortunately, this year it's up in the air. I don't know what's going to happen.
Right.
But I have two kids now, and my oldest daughter. Here's the self gratification here. My oldest daughter is pregnant, and she's going to make me a grandfather very soon. So I'm sure that my trade plan will adopt, so to speak, or change with my grandchildren. So one of the other things I say is trade plan is a living document. It always changes with your knowledge and your experience. And now in this case, my trade plan is going to change because of my my personal goals. So I think I'll probably be spending more time with my closer to my daughters and spending more time with my grandchildren.
Awesome. Well, congratulations there.
Thank you very much.
Alan in our audience has a different objective. He says hookers and blow. If that's your objective, more. I don't know if you guys ever saw it, but there was a period where one of the lotteries was like $750 million. And it was in Las Vegas, and this reporter's on live TV, and she's interviewing people that are in the lotto place filling out the tickets, and she taps this guy on the shoulder, and he was a younger guy, and she says, "Sir, if you win, what are you going to do with this money?" And he just turns to her with the straightest face you can imagine. He says, "Hookers and cocaine." And she's like, "That's not the answer I was looking for," and just walks away. Gotta love live TV. Goals and objective, folks. That's not mine, but we each have our own thing. So, Alan, if that's yours, good. I hope. Take a lot of pictures and have that for posterity.
Alan, I did that. It's okay.
Yeah, it's been there, done that, right?
Been there, done it.
All right, so you've got the purpose, which, at OTA is always talking about what's your why, and I'm definitely a fan of that, figuring out why you're doing this. There has to be a goal or an objective for you other than just the money side. From there, where do we go with trading plans?
Well, we got some kind of a methodology, right? And not necessarily the strategy part, but a methodology, like education or mentorship. How am I going to experience? What markets am I going to look at? Am I going to trade stocks to increase my wealth, or I'm going to trade futures for income, or I'm going to use options for income or wealth protection? And then from there, the analytics that are behind our methodology, right? Like we go into, greater risk management, how much capital I'm going to use per each one of these asset classes, or how much risk I'm going to take, or what leverage I'm going to put up, right? A lot of the assets that we trade, options and futures, have a lot of leverage, so, how much leverage am I going to use? So that methodology, how I'm going to put my trade plan together, how I'm going to separate the different markets. And again, the trade plan becomes very stratified, right? You have a big picture, but then you go through multiple layers, and the objectives and goals are still there. They're just unique for each one of the different asset classes. Mm-hmm.
You mentioned it's more like a business plan, and the reason that I think you need to write this as a business plan is, I think with every business, and I have run my own, but it was really more of a consultancy, so I wouldn't call it like frontline and dealing with customers on a regular basis. But in setting up your business, there's always the how am I going to get from target A to target B, and usually that's quantified. So if you're looking at this as a business, which I think you should treat it like one, what's your goal? Is it to make $100,000 a year from it? Okay, great. Well, then that means you need to be making $500 a day, assuming 200 trading days per year. Now you can start to set goals on that, but the plan needs to be there so you can say, what do I need to now do if I'm trading futures or Forex or options or equities or cryptocurrencies, doesn't matter. What can I do within that to achieve $500? So now you whittle down your target goal for each day from a monetary perspective. We've established the higher goal of what you're going to do with that money once you get it. Now you start whittling down to the actual nuts and bolts of it. So to me, when you're thinking of it as a trading plan, you should look at it as a business plan. Obviously, there's overhead and expenses, which we can talk about with tax pros later on. But for me, it's about setting an individual goal that helps you achieve that goal.
Yeah, I love how you say how you break it down, right? You have the big picture, like I want to make 100,000 a year or whatever. But if you every day you woke up and you said, "Oh, I have to make $100,000, or that's my goal for the year," that's too much pressure for us. So we break it down. Well, 200 trading days, blah 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 blah. Break it down, break it
Right.
down, break it down, break it down. Now it's $500 a day. That's a lot more manageable. That's a lot more achievable, right?
Mm-hmm.
And stringing those days together. I'll give you a great. You love floor stories. I'll give you a great floor story. So it was a day on the floor where the market was absolutely crazy, and any trader was worth their salt could have made thousands of dollars, tens of thousands of dollars. And I had a new trader, a new junior trader that I had training in the ring, and he was sitting on the edge of the pit at the end of the day, reconciling his trades, and he looked like his pet dog had died, right? And so, being the father type mentor that I am, I went over to him and I said, "Hey, listen, Greg, don't worry about it. Other days will come. You'll be days where you will make money. Don't worry that you didn't make money today." And he looked up at me and he, without even changing the expression, he goes, "Oh, I didn't lose money today. I only made $1,000." Right? And I wanted to just like smack him in the head. And I was like, "No. You made $200,000 today." And when I put it in that picture for him, in other words, that if you make $1,000 a day over a course of a year, you're going to make $200,000 or $250,000. Once I broke it down for him like that, and he realized that that's the plan he should have, not trying to make as much money as he can, just try to do as best as he can every day, and don't let the chips fall as they may. He became a lot more successful trader.
Mm-hmm. It's funny, just to clarify, because I know regulators are all over the place now. When say making $500 a day or $1,000 a day, you're basically saying average over those 200 trading days, because everybody knows there's no way in hell there's not a person alive who's going to make $1,000 every day and never lose. And there are some people. I actually encountered a few of them at these traders expos that claim that they've never lost. Just flip them the middle finger, call them obscenities, and just walk away because they're clearly lying.
Right. And that's the other thing. We set daily goals, right? That's part of our trade plan. We set daily goals, but I don't want to set a daily goal based on a dollar value and say, "Oh, this is what I want to make every day." But what I will do is in my risk management, I'll say, my daily goal is to try to make $500 a day. And if at some point during the day I have made $500, then I'm going to do some risk management rules. In other words, move my stop or, take off some contracts or put myself in a position where I can lock in that $500 because I know that at the end of the day I've achieved that daily goal. Now, if I don't get that goal, well then I'm not going to put that pressure on myself because the next day I'm going to think that I've got to make, $1,000. Got to make up the 500 I didn't make yesterday and the 500 I'm going to make today. And if I don't make money on the next day, now by the end of the week, I got that huge weight on my shoulders. I want to try to do as well as I can every day, but I can use daily goals like $500 in my risk management technique to allow me to move my stops, to allow me to lock in profits, to allow me to have permission to take money off the table and allow me to stay in trades.
I'm going to add on to that point because it's so critical, and I think it might be just gone in one ear and out the other. You talk about the day before, like, let's say I lost $500 yesterday. Now all of a sudden my brain says I have to make 1,000 just to get back to even today. That's a huge problem, especially for you shorter term guys. Leave yesterday in the past, forget about it. I mean, learn from it, don't make the same mistakes, but don't ever try to recoup losses that you lost yesterday or the day before. You're basically saying today is a separate day. I need to just trade effectively. And if I have a great day and I make $2,000, $3,000, $4,000, $5,000, whatever, that's fine. But if you linger on that loss, what will happen is it will make you revenge trade. You start to drop your discipline. You start to drop your money management, risk management. You start trading too big because I have to chase it. I have to make more money today. I can almost guarantee you it will result in bigger losses. So just let it go and treat each day separately. If you're a shorter term guy, longer term, that's a different story.
Yeah, the old expression I used to tell folks in the classroom was, if you started the day with this sentence, I hope I make money today, or I hope I don't lose money today. That's probably a day you probably should take off, because you're not trading, you're smoking hopium. You know what I mean? So,
Yeah.
yeah, exactly.
All right, so you've gone in through the market side of it. We talked about the bigger grand scheme of things, looking at the business plan aspect of it. And, for me, there's a lot of little details in here that we haven't talked about. But, for example, in your business plan, like, I think that you should go through and journal and document a lot. As much as possible, document. Alan, who might be, there he is, he's with us today. Alan just typed in. He sent me a question on journaling, and I don't know if I got his question right a couple of days ago, but journaling to me is critical when you're starting out. I'm sure somebody like John or myself, I don't do journaling anymore because I don't need to. Journaling early on really helps you figure out what you're doing right, what you're doing wrong. So it's critical, anybody in their first few years, you should be journaling and reviewing those and figuring out what you do right and what you do wrong. After 20-something years of it, you know in your head what you're doing right or what you're doing wrong, so it gets a little bit easier. But journaling in this process is incredibly valuable from the fact it helps you identify what you're doing wrong. It's not really about what you're doing right, because you're obviously rewarded instantly for doing the right thing with profits. So let that go. The only thing that really matters is what you're doing wrong, and you have to fix that, and journaling helps you there. So I wanted to throw that into the business plan, because businesses, if I'm a clothing store and I get a whole bunch of shirts that I think are really cool and I put them on the shelves and not one of them sells, I know I'm not going to reorder that, right? These are little things I have to put into my trading plan.
Or how about this? You own a clothing store, and it's some Saturday, some random Saturday in whatever month or whatever, that's the day everybody came in for some reason, and you didn't have enough staff online, and you lost sales because you didn't have the proper staffing, a seasonality, so to speak, right? So journaling allows you to not only learn from the things that you've done wrong in the past, or things that you're going to make an adjustment, but also gives you this back information that says, hey, at about this time last year, this event happened. And that gives you that opportunity to look for the same
pattern
pieces or components of that event and see if that happens again, that seasonality. So yeah, I think journaling for young traders is crucial, not only just for the strengths and weaknesses part, but for recognition, price recognition, the modeling recognition, seasonal recognition. That is really crucial. And I can't tell you how many times I've had I remember walking in, looking in my journal and saying, hey, a year ago today, this event happened, and sure shit, that didn't happen again. So, I mean, yeah, for sure. Markets
absolutely have memory, and it's not to say that the Black Monday is going to happen every year, but I tell you damn well, the markets do. Everyone's talking about it right around that time in October. They're like, oh, Black Monday, yeah, it's going to happen.
Right.
A couple good questions. Alex, he says, what should I track in my journal? We'll get through all that. Let's go through this whole thing, and then we'll kind of break it down at the end. Matthew makes a great point. He goes, it's like golf, one shot at a time and forget about the bad ones.
Exactly.
100%. And you know what? That's probably the best parallel you can draw, because if you're a basketball player and you make a bad shot, it's still about your team. If you're a football player and you miss a tackle, it's about the team. In golf, it's just you. Same with trading. I mean, there's nobody else that you can point the finger at and go, oh, John totally screwed up my trades today. No, John didn't do a damn thing except do his own trades. So it's all on you there.
Right. How many times have you put the ball in the bunker, and you could have oh, it's in the bunker, blah, I'm going to make a double bogey. No, you play one shot at a time. You get in the bunker, boom, who knows? Maybe you knock it 6 inches away, you get up and down for par. So yeah, you just concentrate on all those things that you can control at that moment in time, and then learn from them when you have that moment, that journal, step back and say, hey, next time, maybe instead of hitting the 7-iron into that green, I'm going to add an extra club, especially because it's uphill and into the wind, So yeah. Learn from your mistakes, right? And build upon your strengths. But I want to add some other things. I think it's real important that besides just the methodology and the risk management techniques and the journaling, I think there's a lot of other extraneous kind of things that we can start thinking about. For instance, in my trade plan, I have what I call an emergency contingency plan, where, if I'm having an emergency, for instance, let's say how many folks have had this, where you're trading and all of a sudden you see this little pop-up come up on your trading platform and you're not really paying attention, and it says, oh, by the way, we want to update your platform, and then in the middle of the trading day, your platform starts to update, right? You get knocked offline, or your internet goes down or something. What rules are you going to set forth to make sure that you don't make mental mistakes, right? Or maybe you're just having a personal emergency, or you got to take your mother to the doctors, or your water heater breaks, or the refrigerator goes out, or something like that. Those are the days where, you just say, hey, maybe this is the day I don't trade. The casino is always open,
Yep.
so don't worry about it. Don't feel like you've missed out on something.
That's a good point. And I'll add, we're going to continue layer upon layer with John Rowland and Merlin Rothfeld today. He talked about having a contingency plan, or kind of knowing if you're not 100%, you really should not be trading. And I am a 100% believer in that one. Old story from my trading floor days by the way, guys, I'm a retail trading floor guy. John is an institutional trading floor NYMEX trader, so my floor was very different than that. So, but mine, we have these a bunch of gung-ho day traders on the trading floor, and one of the guys, I won't mention his name, super aggressive young guy, very aggressive, big time trader with regards to volume. And one day he did 10% of Dell's volume in one day back in 1999. I mean, unbelievable to do that much volume. Anyway, he would have these days where he'd make $60,000, and you're like, why, 60 grand, 20 grand, 30 grand. You're like, wow, amazing. And every time he had an argument with his girlfriend, they were a very volatile couple, he would lose, and I mean massive, like getting 6-figure losses in a day. And it got to the point where we knew him so well, we're like, hey, how's it going today? He's like, oh, good. We'd ask him, are you fighting with your girlfriend? He's like, no, I'm good. But if he said, I am, we're arguing, we just tell him to leave. And he finally, at the beginning, he was like, you're a jerk. Don't tell me what to do. And finally, he realized we're trying to save him money because his mind was not thinking about what he did well, which is short-term day trading. It was on something else. So, like you say, if you got in a car accident, some bad news hit you, your dog is sick, could even be a trigger to keep you from focusing on what you really need to focus on.
Yeah, exactly. That mental check-in, right? So, making sure that, you're 100% focused, right? And, I mean, I have a lot of great stories, and we could spend hours talking about that, just that mental aspect.
Yeah.
I mean, we had a guy who never wanted to leave the floor. He never wanted to take a vacation, right? I don't know if I ever told you that story.
No.
Where we finally convinced him to take a vacation, right? We actually paid for his vacation to get him to go away, because we knew he was just stressing out. And he's like, I can't, because something always happens. I'm going to miss out or something, right? You're not going to miss out. Well, the funny story was we did get this guy to take a vacation. We got him a trip to Hawaii for him and his wife, and they went away. And really the reason why we sent him away is because the market had been in such a doldrums that we believed the same thing, that something would happen that when we sent him away. So we sent him away because we wanted the market to do
self-interested.
Right. And so he goes away to Hawaii, and sure enough, that week the market had a couple limit moves, and when he came back, he swear, I told you. So yeah, but
like it.
Yeah. So those things do happen. One of the other things that I, in my trade plan is, this self-discipline. I think that that's real important for us as traders, right? We need to be able to not only give us rules, but we need rules that have disciplines, right? In other words, what happens if I do break my rule, or what happens if I do have one of these big losing days? What am I going to do, right, to protect myself from that revenge trading or trying to make it all back? One of the rules I have is called the DOT rule, DOT, don't overtrade. And in that one, you have to define your own personality, how you would define overtrading. But overtrading could be too many trades, could be a number of contracts, could be too many markets, could be too many positions. And so one of my DOT rules is if I make mistakes or I lose money because I have way too many positions, or I have too many trading too many markets, then what I do is I cut back. I cut back until I can discipline myself, until I can take on more risk, or take on more contract, take on more markets. Because you might have a great plan and you might have a great discipline, but I'm going to tell you that when you have all these different open positions and you're trading options and futures and ETFs and this and that, you know, even if you are managing your risk well and you can just walk away from it, your brain's still going, oh my God, I got to look at this, and you might overmanage it, or you might make mistakes or something to that effect.
Mm-hmm.
So that I do have those self-discipline rules inside of my trade plan.
I've mentioned this to viewers before, back on the trading floor days. There was a period, I call it the downward spiral, which I personally think is going to happen to everybody. And the downward spiral is where you lose one day, and then you go in the next day, and you're dwelling on it. You're thinking about it, and then you lose that second day. And then you're dwelling on it again. And all of a sudden, it just starts this spiral where it feels like you just can't get out of losses. And I walked on the trading floor one day, and my mentor's walking towards me, 6:30 in the morning, or before that, probably 6:15 in the morning. And he says, hey, Merlin, how you doing today? And I go, great. Can't wait to see how much money I lose today. And he just grabs me and he's like, look, just leave. I go, what? Why? Right. He goes, you already lost. What you just said, you psychologically set yourself up for a loss, right? You've admitted defeat before you even started trading. He says, so, go home and take a couple days off. You're in this pit where you can't get out of. And so from there, I developed a couple risk management tools that are in line with what you're talking about. And I would encourage all of you to do this as well, especially if you're a day trader. Is set a circuit breaker. The markets have a circuit breaker if they move too much. You should have one as well, whether that's a specific dollar amount or a number of losing days in a row. I have contingencies for both of those. For example, on a day trading basis, it's $500 maximum loss per day. For some of you, that might not be much. For some of you, that might be way too little. Who cares? It's up to you to find out what that daily loss number is and stick to it. The other one is if I have 3 losing days in a row, I have to take 2 days off because for some reason, I'm just out of sync with the market. Maybe, again, I've got some personal issues, maybe emotional, who knows, or I'm just not reading the market right. So take a couple of days off, regroup. You said it, the markets will always be there. They'll evolve. There'll be new markets too, but it'll always be there for us.
I use the same one. If I have 3 losing days in a row, I take a day off. But here's what I'll also add to that is, don't go home and dwell on the fact that you're sitting home not trading and sit in front of the screen and watch the market and go, oh, I would have had that trade, or I would have had that trade. Do something to clear your mind. Go out and do whatever satisfies your soul. Yeah. Go for a walk, go to the beach, go play golf, go whatever. Walk away, right? Because like you said, the market will always be open. I use the 3-strike rule for day trading. If I have 3 losing trades, that's it. And I know that sounds weird, but if I have 3 losing trades in a row and it's 8:30 in the morning, that's it. I'm done for the day. Boom, I'm gone. But as I'm day trading, once I get that 3rd strike, say I have a winner, loser, winner, loser, winner, loser, right? That's it. I'm done. Okay. Right? 3 strikes, I'm out. Right? So it's just a way that I've learned that a lot of times is once I have that 3rd strike, that's when I make those mistakes where I over leverage, I take too many positions, or I try to recoup my losses or whatever. So that fact. So I love both of those. I do that one.
Here's another thing for everybody. I know we've got some people in who are very experienced, others who are just starting out and trying to find their way in the trading world. I would recommend that you go to your, you can order them on Amazon because you can't go outside anymore, but go to a Target or a Walmart and buy yourself a little spiral notebook and start your day off just each day by writing out on that page what you were feeling, what you're thinking, what the market was doing, and just get your thoughts down on paper so you can go back and revisit it. As you progress, you start adding in more details to that. You can start to go back and review what you did right, what you did wrong. To me, that was one of the easiest ways to advance and kind of figure out what the heck I was doing wrong, which is having a spiral notebook. So that's one of the easy things. Another thing I want to get to here is if you're a short-term intraday trader, it's important that you don't dot, as John said, don't over trade, right? Every time you make a trade, it's going to cost you money in one way or another. And if you start to over trade, all of a sudden you might make $3,000 for the day, but you spent $2,000 in commissions. I mean, that's how it was. That's how it was back on the floor. I mean, I literally had days where on the trading floor I'd make $10,000. I'm like king of the world, right? 10 grand in a day, and I'm in my 20s. Woo! And then you go back to the trading desk and you look at your final sheets. And it's like, oh, you made $3,500. I'm like, what? AL's in the back room going, thanks. You made me $3,500 today.
I've had those days where I'm like, oh wow, that was a wild day. I was head ups and downs and everything, and I'm like, oh, I think in my mind I made like 10 grand, and then my clerk would hand me my statement. I only made $100. He goes, yeah, you made $100. You trade 10,000, 100,000 copies.
Yeah, it's crazy. So what you should do is this is very helpful to me anyway, is because I did average 550 trades a day in the late 90s. That was my average, which is insane. Tell yourself a maximum number of trades you're going to take in a day. And maybe it's 2. Great. Then after you make that second trade, you're done. No matter what you see on the screen, you have to walk away. And I call it the bullets in the gun. You know the classical 6 shooters, right? They shoot how many? 6. Well, I found that when I limited the amount of trades I was making, I thought about each one much more. Is this really worth me taking this trade, right? Should I? Because I only have 5 bullets left after this. You have to be very selective, and you'll find that you actually start making better trades. So come up with a fixed number and stick to it. If you tell yourself, I'm going to do 3 trades maximum per day, then when you finish that third trade, just power down. Don't even look at the market. Walk away and go golf. Go do something else. But I think putting bullets in your gun, so to speak, is a great way to help you with your risk management.
Well, so let's take it one step further. Let's say you're a more experienced trader and you feel like 3 trades is not enough, and you're much more disciplined, right? Let's put a dollar value on how much commissions I'm going to spend.
Right.
Let's say I will trade as many round terms as I can, as long as I don't spend more than $200 in commissions or $500 in commissions. And again, that makes you pick those better trades because you're running, that tab is running, right? That meter is running. And as soon as it gets closer to that commission level, right?
Mm-hmm. Yep.
Because then that keeps you from, let's say, those days where you do make, $500 or $600 or $800 or $1,000 or whatever value, and so you're only spending $200 in commissions or whatever, because that you're making sure that you're going to put money in the bank. Correct. And stop those days where you overtrade and you're the only person who's getting rich is your broker, right? So yeah, I love that. I love both of those ideas. I'm
curious, for the viewers that are watching now, how many trades are you making per day? Go ahead, just type it in. I'm curious to see if I get some doubles. I don't think I'll get any triple digits. I have a feeling I'll get a couple double digit guys, but how many trades are you making per day? We'll see how that goes through here. We've got a little bit of a delay. We'll see how it goes through. Big Ab says, yes, it's very true. He says, update and improve your trading plan where needed. As Mike Tyson says, everyone has a good plan until they get punched in the face. The difference here is, and it's true, every trader has a plan, but most of them don't follow it and they'll change course. The key here is for us to automatically, if you do get punched in the face, you got to stop fighting, sit down and say, okay, what happened? How did I miss that punch in the face, right? And that's where you get better.
Right? Exactly.
Yeah. All right.
On that one. But listen, let's add to something to that. If you're going to be a pro boxer, let's be honest with ourselves. If we're going to be a professional trader or a day trader, you got to learn how to stand in there and take a couple of smacks on the chin too. Yep. We used to call them hickeys. You're going to get a hickey now and then, right? So learn from those as well. So, that's the nature of the beast, right? That you might set a trade plan where you say, I'm going to limit my risk to X amount of dollars, but that's the day the volatility explodes and, your exit, your stop, your plan worked, everything was in line. But, boy, you got hosed on the stop out. Instead of losing $200, you lost $300 or $500 or whatever. I mean, I remember one time I had a stop in gasoline that when the stop got elected, it was just vapor, and the next print was like a cent and a half away. Now, let me just give you perspective. A cent and a half in gasoline is about $650. So that next print cost me $650 per contract. So yeah, some of those days happen. So you have to be aware of that.
Absolutely. All right, so most of you are under the single digits. Jerry, I love what he says in the beginning. He did 30 trades a day, now maybe 3 a week. Great, right? And you probably learned that too. You're probably like, hey, I feel like I'm trading too much. Maybe I'm just feeling too stressed out by it. By starting off with just a couple of trades per day or per week, your stress level will drop as well. You can imagine my stress level trading 550 trades a day. I actually have, you guys might know, I have vitiligo. Sometimes if I get really tan, you'll see it on my face. But a lot of this was caused from trading stress, believe it or not. Yes, clinically proven from my doctor.
Yeah, I swallowed a lot of pizzas. That was my stress.
Well, at least yours is more enjoyable because you can always work those pizzas off. I've got a permanent white marker on my eyeball and on my lip, so that's great.
We all have those skeletons.
We do, unfortunately, just part of what we do. Let me see. With regards to trading plan, you talked about emergency plan. One of the things that I've emphasized over the years is Terra Nova Trading was a company that I did a lot of trading with. They're no longer in business, but what I did is I knew that the system wasn't very robust. There was always tended to be a little bit of problems. So I was on the phone with them probably once every couple of weeks because of tech issues. And I was a pretty experienced trader, so I could fix most of it myself. Some of you may have no idea about these platforms, and you're going to be on with tech support a lot more frequently. Unless it's like an Ameritrade or a a E-Trade, which are just big and you're getting into a call center with thousands of people, I would suggest trying to get the same tech help support every time and building rapport with them. What I did at Terra Nova is I actually sent the guy a bottle of Crown Royal whiskey every year. I don't even know if he drinks, but I sold him a bottle and it had in the card. It just said, "Thank you for helping me be the king." And I tell you what, when I called that guy, I no longer had to give my account number and all this information. He'd be like, "Merlin, how you doing, man? Good to hear from you." You know, it's a simple thing to really help you in a time of need, is to have a customer support that knows you and will bend over backwards to help you. The other side of that is, don't ever go Karen on your support desk at a trading firm. If you go Karen on them and start calling them an asshole and screaming at them, well, 1 second, sir, let me just put you on hold. Boom, you're screwed. Do not yell at these people.
Yeah, well, we'd have customers on the floor. We'd have customers that go Karen on us, and we would do the same thing. And like, "Oh, where's my fill? Where's my fill?" And you're like, "Oh, let me get that for you," and just put the phone down on the desk there. And the guy can hear all the noise going on the floor, but nobody's gonna. Don't you dare pick that phone. Don't. Guys would be like, "I'm gonna get. Don't you touch that phone. You let him.
Let him stew.
Stew. Right. Right. Yeah, for sure."
Alan says intraday trading is much more stressful than swing trading. Is that across the board for all assets? I would say yes. Simply because the big difference here between an intraday and a swing, guys, is a swing trader can trade with smaller contract or share size because they have the benefit of time and looking for a bigger move. When I was day trading intraday, I can't buy 100 shares and expect to make 5 points on it, right? So I'd be trading 1,000 shares trying to make 50 cents on it. So I'm going to make ultimately the same amount of money, but I have a shorter window. So the stress of trading 1,000 shares versus 100 may be too much for some people. I mean, there's times where I was trading 10, 15,000 shares at a time. That's crazy for some people, and that immediately boosts your stress level up when you know that you hit that button and you've got several $1 million on the line. Yeah, I think it's much more stressful on an intraday basis for any asset class.
I would agree with that. But, again, for a stress, to talk about stress for a swing trader, where you have this great idea and the plan and everything, and you put the trade on and the market just does what? It just sits there for days on days and days. And that's not stressful. You're not losing money, right? But, you're like, you start getting anxious, or you're just like, what's happening? Or what did I do wrong? Or what, so, I mean, it's every market's different. Every market's the same, in terms, again, self-discipline. We try to use risk management to eliminate those emotional times, right? Because emotion is going to make us cause mistakes. And, just plan a trade, right?
Yeah.
Trade your plan. So I that's what I stick to.
Stephanie sends a great question to you, John. She says, "John, what kind of wine would you suggest for those stressful days?"
Well, it depends on the weather outside. If it's like this, maybe a nice Cabernet, but in the summertime, maybe a nice Riesling or a Pinot Noir. So it depends on my mood and the food and the temperature outside. So whatever. Yeah,
I mean, I'm looking at it right now. I think you're like in the Arkansas mountains, right? You sure you're not making moonshine out there? I mean, it's
yeah, whiskey, right? Exactly.
Yes, there we go.
Exactly.
All right, if you guys have any more questions for John, do me a favor, send those on in. We'll get to those. I want to give John a second to talk about some of his projects he's working on. Obviously, as traders and educators, you guys are always looking for people to learn from. John does a whole bunch of stuff with bar charts. So what's your upcoming webinar? It's every Wednesday, right?
Yeah, every Wednesday. If you go on the barchart.com main page, on the main page there's a section that says tools. Inside the tools section is free webinars. And right now, actually, it's kind of funny that you said that you wanted to do a trade plan. That's exactly what my webinar this week is going to be, a trade plan. But recent ones that I've done, I did one out there called credit spreads, last week. I just did a Bollinger Band one. Those ones were received pretty well. But it's really about learning how to use the tools and pages that are on bar chart. And so, but inside of those webinars, I give a lot of not inside information, but just kind of general experience information, things that, that will help even the more experienced trader say, hey, here's something for you to think about when you're trading this particular strategy or this asset class. So that's this week, this Wednesday. And then I'm off for 2 weeks for Christmas holiday. But when I come back, I'm really excited. First week in the year, we're going to do one called Dogs of the Dow, which is a strategy based on picking stocks that have fallen out of favor but have high dividend yields, and looking at value versus momentum stocks and looking for trading opportunities. And then after that, I'm going to do one that's called looking at futures markets to trade ETFs. A lot of folks don't like to trade futures because they're too volatile or they don't have the margin or the capital. But how to look at futures markets to trade either ETFs that correlate directly to them, for instance, trade gold or the GLD. Mm-hmm. But outside of that, there's a lot of these ETFs that are related to commodity markets, and they give you some great trading opportunities. Look at the futures market to give you the trading opportunities. Again, the simple stuff about trend and support and resistance and stuff. And then after that, we have a tool inside a bar chart. It's called the Trader's Cheat Sheet, which is really kind of cool. It has the floor pivots, which is very popular among day traders, momentum, support, and resistance, Fibonacci's. And it's like all those little things that everybody has, those little quirky things that all these different day traders like to look at. And we compact it all on one page for you so that you can do your quick day trade analysis, look at momentum swings, look for greater entries and exits based on all these different technical analysis.
Nice. I wanted to bring it up with you in the earlier on because I know, spending years on the NYMEX trading, energy. We had you on back in just after April when we had that crazy market move in crude oil. Now we're getting back to some semblance of normality, kind of closing that gap that we saw all the way back into March. Any thoughts here on crude oil? Because it's got a nice uptrend going for the past month and a half.
Yeah, I think the narrative is is that the vaccine or whatever you want to call this, that there's a feeling that economic activity is going to get back to normal. I think the last time I was on back in October, we talked about I really didn't feel bullish about crude oil until we saw an uptick in demand for refined products. And the one that I said that was really important is jet fuel, air traffic. And so there's this feeling that there's going to be more air travel, and then that's what we're seeing in the price of crude oil. I think the caveat is, like you said, we're getting close to filling that gap. Somewhere here in the low 40, high $48 range, but just above $50. I think once you get into that area, then some fundamentals come back into the market in terms of increased production, not only in the U.S. but around the world. Now, the one thing I do see in crude oil that does give me hope that there is a silver lining is I don't know if we've talked about this. Maybe we have. This concept what the value of different months are.
Right. Yep.
This contango versus backwardation, and the discount we saw during this last 6 months of the summer. We saw $1.50, $2 discounts for for the contract month that is trading versus forward contracts. That contango has flattened. It's almost nil for like the first 3 to 4 months. And then what we're actually seeing from the middle of the summer to the end of the year, we're seeing what is called backwardation, where the front months have a greater value than the back. And that's actually a bullish sign in the market. Right now, the January 21 contract is trading at about 50 cents over the December 21 contract. So that's a bullish sign that maybe the fundamentals are starting to change, and that the shock to the production side is dropped down the production so much, and that we're finally drawing down a lot of this inventory, this overhang, that has been hanging over the market, to allow prices to get up. But I do believe that once we pop over $50, if that's where we're going, then that fundamental cap, low 50, 52 for WTI, maybe 55 for the Brent contract, will probably cap the market out. So I still think there's room to the upside, but I think that a lot of this last leg is we're in the last stages of this last leg.
Cool.
But
cool. Yeah, it's just been so long since I've had you on the program to talk about it. Next time we'll do maybe an asset-specific show, but I wanted to talk about trading plans today. I appreciate you taking some time on today's program. Wednesday, guys, he's going to be doing his own trade plan presentation. I have the webpage up there. I can click that again for you so you guys can see. Go to barchart.com. Right on the front page, you just click on Tools, and you'll see there's a button there that says Free Webinars on the right-hand side of that drop-down window. So if you click on that one, you'll see the registration page there for the How to Build a Successful Trading Plan webinar, which will probably be more detail than what we cover here today. So, John, again, thank you so much for coming on. I appreciate it. Stay warm out there. You're looking pretty cold, Kaczynski.
Well, thanks. It's not as cold as it is out in the California, right? Because you're out in the cold, so to speak, right?
Oh,
go out.
But I'm done. Thanks. I'm here all day.
Yeah. Don't forget to tip your waitresses, right?
We won't. All right, buddy. Well, thanks so much. Best of luck to you. Have a happy holiday if I don't talk to you before then, and I'll talk to you soon.
Yep. Happy holidays to you and to your viewers as well. Thank you very much for having me.
Hey, my pleasure, buddy. Take care.
Bye.
All right, guys, that was John Rowland talking about trading plans. Yeah, there's a lot to talk about. And Alex, don't worry, I'm still going to answer your question from earlier. But Alan says, do you believe that the skills attained through intraday trading can be used for swing trading because price action and patterns are fractal? Hell yeah, absolutely, 100%. If you were to just bring up a chart, any time frame, and I close my eyes and open them up real quick, you remove the time frame, I'm still going to look at it and look for demand zones. I'm looking for patterns. I'm looking for candlesticks. I'm looking for formations, etc. And hey, Don, good to have you with us, my friend. So, yes, it is absolutely the same. The only difference is once you get to something like a daily time frame and you're trading equities, you get a lot of gaps. So the gaps don't usually happen on an intraday basis unless what you're trading is very illiquid. So that's where the change happens, is once we get into daily, weekly, monthly time frames, you'll get gaps on the charts. Other than that, it all is going to look pretty much the same. Now, I am a believer that the longer term time frames have the most power. I personally start with the daily. That's my big time frame. Some people like the weekly or the monthly. Great. I start with the daily, but that's just, a matter of personal preference there. All right, so Alex, you had a long question back. Let me see if I can scroll back through it. Where was that? It says, what should I track in my journal? Trades made, what made me make it, etc. Okay, so here's what should be in it. Number one is the symbol that you're trading, your entry, your stop loss, and your price targets. And what I would do is I'd put a field next to each one of those line items and talk about, why was this the entry price for you? Why was this your target price? What works best is if you have a printer, or you could take a screenshot of the chart that you're trading off of and glue it in. Now, I never really did the chart thing, but I'll tell you what, a student of mine, God, this is probably 20 years ago. He was a student back at the old OTA office in Irvine. I met up with him in like 2005 or 6 at a conference I was speaking at, and he's like, hey, can I take you out to lunch? I'm like, oh, I hate going out to lunch because all we do is talk trading. Anyway, we went, and he sat down, and he had this like book bag with him, right? I'm thinking, oh boy, this is we're a real studious type. And he goes, hey, I want to thank you. You completely changed my trading life. And I'm like, oh, well, I'll pat myself on the back. Thanks. You're welcome. And I said, well, so what did you do? And long story short, he pulled out a journal, which he started taking right after he took my class. And in it, he had the basic information like I'm telling you to do here, which is, what securities you trade, what did the market look like that day? Was it bullish? Was it bearish? What were some of the different factors there in the market? And then, what was the strategies you employed? Why did you buy? Why did you sell? And I always tell people to do this. You should have a plus and minus column on your trading journal. The plus would be anything that supports your trade. So let's say I want to go long on Facebook. And on the plus column, I'd write industry leader, they're well diversified in all these different social media properties. It's on a strong uptrend. It's got an ascending triangle, whatever the case may be. And on the negative side, I would write all the things that could potentially hurt me with this trade. For example, there is a lot of antitrust talk with them right now. There is, security issues. There's, people are starting to talk about leaving and going to other social media platforms. So that will help me because maybe one of those things that I overlooked in the negative column was what drove it against me in that trade. So I would write that down. And what this guy did is he actually showed a picture of the trade that he took. So he had the chart there and he mapped out all the entry level stop. And I thought that was very valuable. And then he showed me one that was like 3 years older. And he goes, this was the first one. And the final one was like every trade was like a business plan, which might be overkill for a lot of you, but I thought it was amazing. And he goes, because I'm journaling and the extent of the detail I put in there, my results have skyrocketed because of it. And he goes, I just keep learning from all the things I'm doing wrong. And I would not have known I was doing these things wrong if I didn't journal them and write them down. So that's the type of stuff I would put in there, Alec. Long on Facebook, now we're talking. Yes, Don loves the long side of Facebook. Yes, the yellow box. Yeah, that's the Don Fron yellow box. I guess that's part of the. And honestly, if you are using Don stuff and your part of your trade plan is, if it's in the yellow box, that's a buy zone. Great. You have to have rules for everything that you do, regardless of what your strategy is. Whether you're using supply and demand or yellow boxes or Ichimoku clouds as your triggers. It's all up to you what strategies and tactics you're going to use. But how do you know if the strategy that you're using works? Well, you journal it and you test it. Another thing here, Alex, is the ability to go back and look at what is working from a strategy perspective, but also what's working from an individual security perspective. This one I will never understand. I'll never understand this, but it's a fact, and it'll happen to all of you. You will all have something in the financial markets that you cannot win with. It's the curveball for Joe Boo. You're not going to hit it. Something bizarre about Apple for me back in the late 90s, early 2000s. If I took 50 trades on Apple, I probably lost on 48 of them. I don't know why. It just always seemed to be that way. And then I would revenge trade and lose more money. And I wouldn't have known this because I was trading all kinds of stuff. But I actually went through and started documenting what did I make money on and what did I lose money on. And Apple continually came to the top of the list as far as losing. And I said, well, screw this. I got two choices, or three. I can take the time and figure out exactly what it is that's causing me to lose money with Apple, and that could take days, weeks, months, years to really figure it out. Number two, I can continue doing exactly what I'm doing and just throw money in that pit that we call Apple. Or number three, I just cut it out. There's tens of thousands of other things to trade, so basically Apple is gone. And it's on the top of my trading plan. There's a little red Apple logo with a line through it, and it says, can't trade this stock ever again. So I'll probably go to the grave having never traded Apple again since I think it was 2001 maybe. And Don says that's him in the ZM. Yeah, we all have something. Don't fight it, right? It's like that one person in your life you're never going to change. And then just get rid of it. Get rid of it. Stop trading. Don't even look at it anymore. There's too many other things to trade. And what really was helpful in that, guys, is I found at the time, and this is back in 98, 99, 2000, 2001, I found that there was this weird cycle for me where I would trade something for 2 years. So I traded E-Trade for 2 years almost every single day. Why? Because it worked. It made me money. I don't care about E-Trade. I don't care what they do. I don't care the business plan. But for some reason, on a day trading basis, I was killing it on E-Trade. And then all of a sudden, I lost it. It didn't work anymore. And then I went through... It was E-Trade, I did Broadcom, and Juniper. So that was 6 years of trading right there just with three companies. Now, yes, I traded some other stuff along the way, but that was like my 90% of my activity was trading those specific stocks because it's what was making me money. And the only way I knew that was by looking at my trade journal and seeing that on a daily basis, this one made me money, that one lost me money, I'm going to stick with the winners. That's a simple one for me. All right. Facebook, the talk du jour. True, Jerry. Most of the guys that I know don't trade the Swiss, although I think it's kind of different. A lot of, most people are sticking with the majors, but you talk to somebody like David Warner and he loves the, yen cross pairs. Well, I don't trade the yen cross pairs. I'll stick with the majors. There's plenty of opportunity there for me. Make an Apple trade tomorrow and I will make it. There you go. I like that, Tom. That's good thinking. He says, make an Apple trade tomorrow and I'll make the opposite trade with double the shares and cover you. There we go. We might be onto something. Reverse psychology. There you go. That's true, Don. But I would never do that. I'm not a big lover of Apple. There's other Amazon would be the one that I buy forever and never get rid of it. But I wouldn't buy Apple and hold it. I actually did violate that rule, and it was kind of iffy. There was an earnings announcement from Apple, I think it was 2 years ago, and it gapped up huge right into a supply level. And so on that morning that it gapped up into it, I just bought a whole bunch of puts. And of course, my colleagues were giving me a hard time. You said you'd never trade Apple. I said, well, technically, I traded a derivative of Apple. There you go. Anyway. All right, let me go into, and Alex, hopefully that helped you out and answered some of your questions there. If you want more, let me know. You can email me. Just go to TraderMerlin.com. You can send in emails there or put them down below the video on this YouTube page, and I'll try to incorporate those into tomorrow's show to get you more info on whatever questions we didn't get to. So let me just go into what happened today with regards to economic announcements. Not a lot of major stuff. I mean, there's one important thing here was industrial production for the European Union. I know it's not something that many people will look at. It was a pretty big beat, right? They were expected to go from 0.1% to 1.8, showing a good uptick in industrial production for the EU. Came out at 2.1, which is certainly a very optimistic sign. That said, there is a F-ton of stimulus being pumped into all the economies around. So everything below in here in this red box, that is coming out this evening. I don't really care about the Chinese stuff because I don't believe their numbers anyway, so you'll never hear me talk about their data. British pound, they have their unemployment rate coming out here in just a little bit, 11 p.m. tonight Pacific time, so keep your eye on that one. And as far as tomorrow goes, we do have some announcements. Actually, we have quite a lot of announcements. As you can see here, the morning is really chocked full with U.S. stuff. You have Empire State Manufacturing Index, which I'm a fan of watching. I think that's the major one for the manufacturing numbers. You also have capacity utilization rate, industrial production, and then during the trading day at about 1 p.m., we have TIC long-term purchases coming out, so that'll be an important one as well. So there you go. That I think that's going to do it for me, guys. Yes, at least Apple does pay dividend. That's nice. Yeah, dividends. I'm not a big dividend guy, but some people are. All right, guys, that's going to do it for me. Tomorrow, let's see, tomorrow is Tuesday. Gosh, I had this all mapped out. I actually went and dug and got a whole bunch of guests for the show this week. It should be pretty good. I know that some of you like the solo shows that I do. Others of you want me to have guests on all the time. So I'm trying to find a happy balance. Last week, we had mostly guests. This week, I'll have some more guests for you. So tomorrow, we are going to actually talk about more of a niche market. You don't see too many people actively trading cryptocurrencies. Tomorrow, I'm going to have Grayson Harnwell on the program, who he trades crypto. So we'll just talk about trading cryptos tomorrow. I think that'd be kind of interesting. I'll also tell you a little bit about the little, I guess it's not sneaky in any way. There's certain things that cryptocurrencies do that the equity markets don't do. For example, quite often you'll get companies, or actually, sometimes you'll get a company does a spin-off and they'll just give you shares, right? GE did it a couple years back. They spun off a company and in your account, magically, there were some shares that showed up. Well, this is called airdrops in the cryptocurrency world. And last night, actually as of Friday night, I believe at midnight, if you owned any Ripple, you got 1-to-1 new coins from another company, which was kind of cool. So basically, I sold a bunch of Bitcoin and I just bought Ripple so that I would be time-stamped as having owned Ripple at the time of the airdrop. And basically, I'll sell my Ripple today and buy back into Bitcoin, which unfortunately was up 6% today. Damn it. All right, I missed on that one. But yeah, this is one way that you can capitalize on these airdrops or distributions, and hopefully that new company will do rather well, because now I'm going to have about 100,000 shares of it. That should be, or 100,000 tokens. Should be good. All right, that's going to do it for me, I think. I'm exhausted. Been a long day. Anyway, hope you guys enjoyed John Rowland. Again, check out his webinar. He's going to be at stockcharts.com talking about trading plan on Wednesday. You can just go to barcharts.com to register for that one. Easy to do. He's got a lot of other great webinars that he's done on a variety of different topics, and there's just some great content there as well. So hopefully you guys enjoy that one. For tomorrow's show, if you have any specific cryptocurrency questions, let me know. Grayson and I will try to cover as much as possible. I know it's a niche market, and there's a lot to talk about in the crypto space. Some of you might not even want to watch it because you hate cryptos. Hey, you know what? If you can trade it and make money on it, you should be interested. All right, we'll wrap it up for today. Anyway, hope you guys enjoyed that one. I will see you all tomorrow. Take care, everybody.